Nathan here, and thanks for tuning in to this Tuesday night's chats with Birchie. So I will give us a couple of moments until everyone can join in, and if you are liking it, smash up those likes. And got lots of things to talk a little bit about, lots of things to talk a lot about today. So I've got a big stack of paper here for us to talk about. Got a few things that I've witnessed myself over the course of the last few days. An incident that I want to tell everybody about that happened the other day, and lots of cool things. So I'll just wait until see a lot of people online, and we will get the show on the road. So just seeing emails come through, properties that are settling and all different stuff. So cool, thanks for the likes, everyone, and thanks for tuning in and spending your Tuesday night watching and listening to what I have to say. Topic of discussion is what is happening to the banks. Something big happened on the weekend. I actually had an incident, and I will share that with everyone tonight. Want to talk about that, want to talk about the news, want to talk about crypto market, want to talk about the property market, want to talk about what I'm seeing out there, maybe a little bit of an update, fly over each state, where things are going to in the future, and any questions that you have. So flick the questions over into the comment section, and I will get to them shortly. So firstly, what is happening to the banks? There's a couple of things that I want to go into today. One is a photo that I posted on Birchie over the weekend, and some commentary that I made along with that. Quite often I have things going everywhere, right? I've got properties that are settling, I've got deals that I'm doing, tradies that need to be paid, my payroll's like 100 grand a week. There's lots of things that money is required for. Sometimes I need to go and get physical cash, because that's how people want to get paid, is by having cash. I've noticed over the course of the last couple of years that things are getting much tighter out there when you go to the bank. They say, oh, we can't give you enough, we don't have much here. I remember the days where I used to go and get $50,000, $100,000 in a day, and it would be fine. They'd have it, just go in there, hey, here you go, Nathan, here's some cash, thanks for coming, have a great day. Now, over the last couple of years, it's gone down a lot, and it went down to a $10,000 limit, and it was very difficult to get a bank to give you 10 grand. Occasionally I might get 20 or something like that. But the other day I needed to get 30 grand. And I went into the bank, they said, no, you got no chance. And they gave me 5. So I was like, okay, if I have to go to 5, right, I'll go to the next bank, they'll give me 10. I went to the next bank, they gave me 5. I was like, hang on a second, why is everyone giving me 5 grand for, right? It's unofficial, but everyone was talking about the $10,000 cash ban. It was difficult to get 10 grand beforehand, but now it's difficult to get 5. So for me, I had to go to further banks, and your FBOS cards will only get you 2 grand or 1 grand out per day. So I was like, shit, it's a Friday. I'll go to a couple of banks on a Friday, and then on a Saturday morning, go to a couple of banks, get some cash. If I have to go to 6 banks and get 5 grand out of each bank, I'll go do that. So I got to a point where I was going to my last bank, and it was getting close to lunchtime. And by this point, I'd really had the shits, because there wasn't many banks open. I literally had to go everywhere to get cash to pay for what I need to pay for. So I went to this final bank, and when I went to the bank, did I get a serving, right? With this one bank, I used to have banners in their branch, right? So they know who I am, right? I used to have banners for many years in their branch. There were 7 branches, 8 branches that had a life-size banner of myself in the bank. They endorsed me. We did business together, and lots of cool things came from that. However, when I went to the bank and asked them for the 5 grand, they said, we can't give you money, right? And I was like, come on a second, right? I need some cash. They go, you need your FBOS card. And I was like, look, I don't have my FBOS card. If I had my FBOS card, I wouldn't need to come in here and ask for the cash. And that started to irritate me. I said, look, I'm going to go to my car, going to get my wallet, going to get all my Medicare card, all that sort of stuff. I'll find what I've got. If I've got a card, great. And actually, someone had one of my cards, which was from this bank, so I didn't actually have the card. I went back to the bank and said, look, here's all my IDs. You can ID me. You know who I am. I just transferred the cash that I needed. Just get it out. And they would give me $5,000. Right? And we're going on for like 15 minutes, backwards and forwards, over $5,000. Right? $5,000. And they tried quizzing me as to why I wanted $5,000. And I'm like, guys, like literally in my bank accounts, I've got like 50 bank accounts with you guys. You can see that there's lots of transactions. Do your fucking job. You know who I am. And I maybe like once a year, once every 2 years, I'll crack it. I carry so much stress every day. I never let it affect me. I don't care. Lots of things go wrong. I've got a strong EQ. Anyway, this really frustrated me to the point where I picked up, I was ready to push the computer screens over, and I just went like, get the fuck out of here. Like, you guys are fucking disgusting. You can't give me $5,000. Right? They didn't give me $5,000. So, as I walked out, I put on a show. I said thanks for fucking nothing, and, it was a bit of a show. I went down to another bank, and they gave me $6,000. Beautiful, right? So it's fine. They gave me cash out. So I just need to get some cash. And when I was in the bank requesting my money, they actually asked me, Nathan, look, it's process. It's here. We're here to help you, protect you, not for us. We're here to protect you by not giving you money. I was like, I just need $5,000, right? It's not much to ask for. It's $5,000, right? Like, we all know who I am, what's going on here. You've got dealings. We've dealt with each other for years. I just want $5,000 out, right? I understand I have to go to 6 banks. If I want $30,000, I have to go to 6 banks and get $5,000 from each bank. I'm here. I've driven like 20 minutes to get here. Just give me this money. They go, you should transfer it online. That's how it's got to be. And I said, well, the people that want the money, I need to give them cash, not transfer, right? It's nothing, right? And they actually said, they go, look, the only way we can actually help you is if you give us an invoice to show us what you're going to do with the money. And that is when I fucking lost it, right? When I fucking lost it, they asked me to show them an invoice as to why they should be giving my money. And I was like, you guys are completely and utterly fucked, right? I got angry. I wanted to bash their computers. I wanted to kick the bins on the way out. I wanted to lose it even more. I just held it. I walked out. I said my piece, and it was really, really disgusting. Like, it's my money, right? Or is it? And that's the question. That's the topic for discussion today. Because if the money is in the bank, it is not yours. It's a property of the bank. You are a creditor to the bank. So if you have your money in a bank, you are a creditor of the bank. It is not your money. The bank doesn't owe you that money. You go onto the creditors list. Understand that, right? That's not where your wealth is. A lot of people think, having savings, having money in the bank, that's where, things are at. Reality is that if the money's in the bank, it's not yours. Just remember that. So I drove about an hour away, and I went to the Central Coast. I needed to meet someone on the Central Coast, and I needed some more cash on the Central Coast, right? I've got hundreds of bank accounts. So I could sit there. I actually literally get the cards when they send them to me. I cut them all up. In my head, my new strategy is that I never have to go to the bank again. I'm going to set up 10 bank accounts with 5 banks. 10 bank accounts with 5 banks is 50 bank accounts. If they give you $2,000 a day limit, I can get $100,000 cash out if that was the case and I needed to or whatever. But literally, my bank accounts are always empty. I never want money in the bank. I'm always spending and I'm always broke. People think, oh, Nathan's going to have heaps of cash or he's got money or whatever. I'm broke, constantly broke. I've spent the money before I've got it, and I'm buying more assets that are giving me cash flow. And that's why I drive around with the car with the cash flow number plates, because it's all about the cash flow. I know that tomorrow I'll wake up, I don't know how much money will come in my account, but I need to spend money daily, so I think people should earn money daily. So I'm all about the cash flow. I take that cash out and I buy as many assets as I can. But I went to this bank and I thought I'll go and try my luck with some FPOS cards and whatever. And I saw this sign and it says here, notice, the bank at Australia Post. Due to temporary closure of the Commonwealth Bank, the entrance, Australia Post may be able to help you. Pass book deposits and withdrawals, FPOS cards and deposits and withdrawals, and balance inquiries. Please help For help and support, please visit the entrance post office. This was from a Commonwealth bank, right? And it read how it says, due to temporary closure of Commonwealth Bank, the entrance. I looked through, you can see here, this is like a piece of paper on a grill. You can see straight through these grills in the store, and I can see everything that was in the bank. The bank is being packed up and it will be gone by June. The locals told me the ATM will be gone and there's no ATM. If anyone knows the Central Coast of New South Wales, you know it's a pretty big place. You know the entrance is a pretty big place. The next place over is Batto Bay, which is like 15 minutes down the road. There is no ATM. There's only one ATM in the entrance now after they removed this one from the CommBank. Takes me on to think about something else, and it was like the aha moment, right? The aha moment is everything I've been telling everybody for the last 2, 3, 4 years, when everyone thought that my head had gone and I was talking some whacked up shit. We are being forced with a totalitarian communist style regime to be in a cashless society where you have to use digital currency, which is trapped inside of a network. If they want to turn you off, they'll say, no, you can't send that bank money. They say you can't set up a new bank account, you can't do this, you can't do that. They will literally lock you out of that system. That sign that I saw, I'm going to pick it up here, bring it back up. This sign is not the first time I've seen one of these. I have seen this sign over 30 times in the last year. Where other places have I seen it? I saw the Westpac branch at Norwest near my office have the same sign on it at the start of Corona. That bank has now gone. It is missing. It is closed down. It is gone to heaven. It doesn't exist. There is no bank for Westpac at Norwest. And then when you walk into the shopping centre at Norwest, there was a St George Bank. Oh, look at that. St George Bank, gone. Doesn't exist. Gone to heaven. There is no St George Bank. What did it say? Due to temporary closure, due to renovations, the bank's never come back, right? I saw one bank open up in the spot of another bank, and I was like, wow, there is a bank here. I said, this bank, like this bank that I'm referring to, is very nice. It feels like an Optus store or a Telstra store. Nice sitting areas, iPads everywhere. There's no screens, no like, you know. And I said to him, don't you feel a bit uncomfortable being in this bank, right? What happens? Someone comes in, give me all your money, right? And they said, Nathan, this bank is a beautiful bank, right? It's a really nice bank, this one. And I said, aren't you concerned about something going wrong? They said, well, we actually don't have, any money. We don't have money here. And I was like, okay. And we were talking about it, and these staff are lovely. And they said, we've moved from our old branch where we used to deal with a lot of money into this branch, so then we can help the elderly get into digital, learn how to use it on the computer and all that sort of stuff. So looking at that bank set themselves up in a new store, much smaller, remind you, only needs 2 teller staff and 2 little meeting rooms instead of being like 8 teller staff with the big shutters and all that sort of stuff. These banks have no money and they are sending us cashless. Don't be fooled. Protect yourself. Have assets, have liquidity outside of that system. When they say that you can't trade in it, are you going to be the king of the old world, or are you going to be a peasant in the new world? And I'm not going to be the one that's going to be, requesting help and all that sort of stuff. That's not my game. So make sure that you protect yourself. There's many ways of how you can protect yourself. If your money is in the system, it is not yours. I prefer not to have any money. I am always broke as fuck, but I know that I have cash flow coming through, and I put that into assets that are going to create more and more cash flow. But just as a bit of an update, we are heading into a full commie-style cashless society. You think that you own your money in the bank. You do not. You are a creditor of that bank. If the bank was to go bankrupt, you would go on the creditors list as a part of the insolvency and administration process. So these banks, as much as I want to get angry at the staff and all that, They're just people that are going to be missing their job shortly because they won't have one, because there's not going to be any cash. These branches are dropping like flies. If your local bank, let's use this one as a bit of a game. We've talked about inflation a lot. Everyone constantly writes in about inflation and what's happening now with their purchasing ability. If you have noticed a bank in your local area, maybe drop us a little comment of which bank brand and which branch it is, where you've seen it close down, because this is happening everywhere, right? It doesn't matter which state you're in, which bank, which city, which town. These banks are dropping like flies, and it's because they're going completely cashless. They are teaching us how to live in a digital world, and basically you are losing your rights to trade, and you are being forced. If this was ACCC coming in, it would be called third line forcing. They are forcing you to use a digital illusion of your wealth, but not actually your actual wealth. And who wants to have money? Because if you had $100, it'll buy you less than what $100 would have last year, and $100 would have last 6 months ago. Everything is getting inflated away, and that is why we are being forced into a digital world, because they can control how we behave, how we spend our currency, and what we do. So there is lots of ways that you can protect yourself. This is not an episode for us to talk about that into detail, but be a little bit smart, be diligent, and know it's not a matter of pulling that cash out of the bank and putting it under your mattress, because people that put their cash under their pillow, there becomes issues with that. One is being security, and two is, most importantly, is the inflation aspect of it, because you're losing your purchasing power. So on that note, just going to check out some of your comments. If you've got any questions, that would be, I'll just do that. Tell them you're going to the casino. I could have told them I was going to the hookers for all they care. It doesn't really matter. If it was my money, they should be able to give me my money. But it's not even money, right? It is a currency. It's a digital illusion of currency, and you don't control it. You are just a creditor to that entity. It's crazy. When I order change for the store, I have to give them several hours notice to put together $500. They do not have it. Fuck off. Fuck off, Mr. Talks. Not scared to say how it is. For those of you that haven't have been missing the Tuesday night chats, head over to YouTube, head over to Spotify, Google, and Apple. And I've been doing the No BS with Birchie podcast. They come out every Tuesday, where I talk about topics of certain things, and people seem to be liking that as well. So, Nathan, do you need to sell down property to clear consumer debt? Is there a better option? Thank you. Good question, Nathan. So should you sell down your property to pay off your debt? I'm going to touch on this for about maybe a minute or two, and then I'm going to move straight on. When I first started investing, I thought if I could buy 10 properties at $200,000 a piece, that'd be great. Right? They rent for $300 a week, neutral cash flow. If those properties go from $200,000 to $400,000, then I could sell off half, pay out the other half. But what I realized over the years is that the imaginary thing that happens to all our currency is inflation. It's not the property that's going up in value, it's your money that is losing the value. And I've never heard people come in and say, I'm so glad I sold my property 20 years ago, Nathan. It was the best decision I ever made. People say, I regret selling a property, and they say, I wish I had bought more. So the reason being is that inflation is pushing up the prices. So not only are the purchase prices being increased, but your rents are being increased. So for me, my initial goal was to have them double, sell off some, pay out some debt. However, now how I look at it is that I look at the rental income being inflated away, and there's a lot of people, specifically on the Gold Coast. I've seen that Michelle's on here. Give a shout out to Michelle from the Gold Coast. She is the licensee of the Blink Property Office in Queensland, and we've got properties that we manage all the way from the tip of Cape York all the way down to the Gold Coast. In Queensland, we've got thousands of properties that we manage. And with those properties, we've been pushing those rents up big time. So a lot of our owners have seen extra sort of $80, $100, $120 a week in rental income over the course per week recently. So if you had 10 properties that were neutral cash flow to start off with, you could either pay down that debt, which isn't really the most exciting thing, or you could push your cash flow up and live off that cash flow and watch the debt become worth less and less. 100 grand going back 10 years ago was a lot of money to have in debt. 100 grand a day would pay your stamp duty. So the money is losing its value. The debt is becoming more and more worthless. And you've got to ask yourself, if you had $1 million property, and this is no financial advice because that's not what I do, in case the regulators like to watch, and they like to say Nathan may give financial advice, and I say to them. But in short, looking at if you had $1 million worth of cash in your bank account, which isn't even your money, but if you had $1 million of cash, let's say you had it as cash, you had two options. One, you could pay out your mortgage of $1 million. Great, you don't have to pay the mortgage anymore. Or two, you could use that $1 million for something else. Most people would go and pay off their mortgage. What would happen in that case is if you've got $1 million mortgage at 3% interest rate, you would be saving yourself $30,000 a year. But because interest rates are so low, who'd want to pay off that debt, you could use that same $1 million and go and buy another $1 million worth of asset and have the $1 million mortgage over here with the $1 million property, just for hypothetical, and then have your $1 million worth of new asset. So instead of having $1 million worth of paid out asset that could double to $2 million, and if you had to sell it, everything else has been inflated, then you're losing purchasing power. You could take that extra $1 million, instead of paying that down, you could buy an extra $1 million worth of property, meaning that you've got $2 million worth of exposure into that market. You would have new cash flow coming in on that new $1 million worth of asset. Let's say it's 7% return. 7% of $1 million is 70 grand. You could pay 30 grand into your mortgage and keep 40 grand into your pocket. But most importantly, you would have $2 million worth of asset. If the market was to double and inflation was to come through, we would see that $2 million turn into $4 million, so you'd be in a much greater net position. So for me, I'm a big fan of paying down my debt. My properties today are positive cash flow, obviously, but as those properties are turned from interest only to principal and interest, the extra cash flow just pays down that debt and it just sorts itself out. So it depends on your strategy. It's important to have a strategy. If you need one, there's a little note on the video here. Reach out to the team for a discovery session and see what options you have. More questions here. G'day everyone. Jenna, property and stocks right now are hot. If you have the cash, where would you put it? Good question. I've been buying motels. I'm up to 15 motels that I've bought for myself this year, but that's not for everybody's game. It's just a business model that I have right now that I'm working on, is building my Birch Hotel Group. But where would I put my cash? Certainly it wouldn't be in the bank because you'd probably lose your purchasing power of it. It wouldn't be in the shares. Here's something on the share market as well. A year ago, a lot of people would remember just that 1 year ago when everything happened and the said virus that came out allegedly had caused for the markets to crash. What happened is the stock market crashed, and I said that we would see these zombie companies, which would be overinflated. It's not something I'd be playing in, and I said that it was very volatile. A lot of people are asking me, not really that many, but some people are asking me, "Hey Nathan, what's happening to the stock market? I thought you thought it was going to crash." Did the stock market crash or did it not crash, right? What is the ASX at the moment? I haven't even looked at it, right? But I know where people's super funds are at. I know where things are at. People might be sitting there going, well, I had 100 grand in the stock market and now it's still 100 grand. I had 100 grand in my super fund and now it's still 100 grand. Okay. But we've also seen 50% more currency being printed into circulation in the last 12 months, and inflation has gone through the roof. Just for an example, I employed a new tradie the other day, and the tradie requires a ute that I need to put some toolboxes on and send them off all around the country. And I went to look for some utes, and I realised that those Toyota Hilux workmates used to be they're just a little single cab ute with a tray on it. Without the tray, they used to be $19,990. Now they're like 30 grand. Second-hand ones are 30 grand. The price of everything has gone up. So if you had 100 grand in your super this time last year and you were going to retire and you still have 100 grand, or you have 110 and you feel really wealthy, you wouldn't be able to buy much to live today because you have lost your purchasing power, and that is what is happening out there. Property, not all property is overcooked, but there definitely is some. One of my investors the other day, going back about 4 years ago, when I first started seeing APRA tighter lending and we went into quantitative tightening, I saw developers getting into trouble, and I went out and bought land, and a lot of my investors did builds because we bought the properties in bulk, the land in bulk, we built the houses in bulk, and we got discounted building costs and all that sort of stuff. One of my investors who's been texting me is a good mate of mine. He just sold his property. It was a block of land in Box Hill. Out in Box Hill, blocks of land were selling for about $1,000 a square metre. We picked them up really cheap back then. A block of 525 square metres, I think he bought for like 500 grand, 520 maybe. He just sold it on the weekend for 955 square metres. Literally, on these blocks of land, right? 300 square metre blocks are selling for 500 grand, 600 grand. This guy had a 525. The person can split it into two and have two properties at 260 square metres, 260 square metres of land, and they will sell for 500,000 each. Like, that's the price he sold for. If you had to build a house on 250 square metres, and no offence to anyone that has one, but you know, you're going to have a 40 square metre backyard and a 2-story house, and you don't have any movement, right? When you go to jail, you get a little bit of daylight, right? I'm sure Jared Hayden's got that, and it's probably a bit too soon to make comments like that, but you know, in jail you get 2 hours a day of light or whatever the case may be, and you can play in the little yard. That's most people's mortgages right now. People are being hocked up to the hill because they're making it very cheap to get hooked into this debt. They're getting, you know, incentives to push up and stimulate these markets and to overinflate some of these markets. Some great results have occurred out there in these markets, but you know, some of them are a little bit hot. But there is still markets where you can pick up houses for 200 grand and townhouses in capital cities for 150 grand. I just did one today which was 210,000. It's a 10-year-old townhouse. It sold for 265,000 and rents are $320 a week. Thing is that you couldn't afford to build that property today, so it's being purchased below the commodities prices to build that asset. I did talk a lot about this in next week's podcast that will be coming out, but I will get onto that a little bit later as I go through the news. But if it was me investing into property now, I'd be going to places where you can buy the infrastructure for cheaper than what it could cost to build it. So large capital cities. One of the first things here that my team has printed out as a news article is regional residential properties rent surge almost up threefold on capital market city markets rises. So that will be one of the topics for today. But if you can pick up, you know, a property for less than what it would cost to build, for 100,000, for 150,000, for 200,000, you're doing very, very well, because as inflation hits, those costs will rise to build those things and drag up that market. So the market it's not the property market that is any form of a bubble, it is the currency, and everybody is trapped. I feel that they're going to take out liquidity from the market very shortly, and that's one of the topics that I'm going to talk about today, is quantitative tightening. Are they going to do it? When are they going to do it? And what's going to be the outcome from that? So, yeah, cool. And I noticed here that my team have pinned a comment that says register for June's webinar on how to build a property portfolio using a self-managed super fund. So if you have a super fund and you haven't been cleaned out in the last year, you should register for the webinar. If you have a super fund and you don't know who is managing your money, you should be subscribing and registering to the webinar. If you have a super fund in all, should be registering it. If you like watching what comes out of my mouth, should be registering to that. So first article of today, and it gets me onto what I want to talk about with the markets. What is happening in the property markets out there? Are they all cooked? Is the property market too hot? What is happening? So it's definitely getting hot in here. It was pretty cool, and I put the heater on before I started the tonight's Facebook Live, and it's pretty hot now. So I can't get up and turn it off. I don't even know where the remote is. Regional residential property rent surge up almost threefold on capital city markets. The cost of renting a property in Australia's regions jumped by almost 3 times as much as the capital cities over the past years, with renewed domestic tourism potentially a factor in pushing up prices, new data shows. CoreLogic's latest report revealed rent estimates for all regional properties surged 9.6% in the 12 months. That is a 10% inflation. Is it just the regional property markets has boomed? Is it just rents that are rising? No, it's sort of in line with just inflation. So remember, as you're building a property portfolio and you're building your asset base, you're going to look at your capital appreciation, which is being caused from inflation, but you've also got your cash flow that's getting inflated away as well. So just be mindful of that. One of the things that I have seen is specifically in Queensland, Perth, Central Coast. It's actually everywhere apart from really Melbourne and Sydney. Sydney's taken a hit. Melbourne, in a lot of areas, has taken a hit from a rental figure. The Gold Coast, Brisbane, Cairns, Townsville, Gladstone, Chinchilla, like anywhere in Queensland, has all gone up sort of 50, 80, 100 bucks a week over the course of the last 12 months. Rents have gone up astronomical. It's been great because we've been pushing up those rents. Michelle and the team in the Queensland office have been pushing up those rents from behalf of our investors. Some of my investors have got 10 properties. Now they're getting 100 bucks times 10 a week more. So that's $1,000 extra pay rise they got just because it can happen. And it's not just limited to Queensland. It's not just limited to Perth. In Perth, I saw one yesterday which is $380 a week. Going back a year ago, it was about $220. This property, we actually secured one, which is $225,000, rents for $380 per week. Positive cash flow, $150 a week, and that's in the city. The strongest regional markets include the Richmond Tweed area of New South Wales up north, where year-on-year median asking weekly rent spiked 17.6% to $590 a week, and central Queensland and the Sunshine Coast, where the jump respectively 15.3% to $340 per week and 15% to $550. The most expensive asking rents were in the Southern Highlands, Shoalhaven areas, New South Wales at $620 a week, up 13.2%. More severe consequences of the recent tightening rental markets include housing stress and homelessness. Mrs. Owens said the sea and tree chains exodus of people escaping to the cities in the September and December quarters was potentially skewed to the higher income workers, given remote work trended to be concentrated in the knowledge economy, which would put further upward pressure on property sales and rent prices. So there is some serious, overheated markets in some of these regional areas as well. Some areas where I've seen them go up from $400,000 a property for a little old fibro shack to $1.1 million for a little old fibro shack, all within a year, all within the biggest depression, so-called, that we've seen. Something to be mindful of when we're looking at what's happening with the property market out there is what will happen, right? We've seen all these people exiting Victoria to the Gold Coast and the Brisbane and Sydney and all those sorts of things. What will actually happen when we start seeing everybody fleeing third world countries like US, UK, Canada, all these third world countries which have been held in a prison in their own house for the last year, and they're like, well, we want to get out. We've seen that, some of those TV actors, I don't even know what the names are, Matt Damon or whoever they are, that live in Australia. Now we want to go over there because they're feeling like the land of the free. We want to be a part of that country, whatever. Imagine what will happen when we start seeing people come in to Australia from all these third world countries, as I said, like UK, US, Canada, all of them. When people start fleeing their nations and they come into Australia, where do they go for? They're like, oh, Sydney, that's the capital city, Sydney. You start at Sydney and you work your way out. So immigration comes to the capital cities. So Melbourne and Sydney might be feeling like, rents are a little bit crap and all that sort of stuff. that is the opportunity, because that market is sort of undervalued at the moment. So that's just my 2 cents on what I see on that front in the market at this point. I've seen a message here. Leave a like if you want Nathan to do more Tuesday night likes. So Tuesday night live. So smash up those likes, guys and girls. Politicians play with fire by raising inflation. So this article is coming from, I don't know where it's come from, but it says here, prices are rising, government spending is soaring, and trillions of dollars of new money appears to be by magic, as if by magic. It is all intended, we're told, to sustain the economy through the scamdemic and then get individuals and businesses back on their feet as that so-called illness fears retreat. But many observers can't help but wonder if pricing rises are not a sign of a country turning to health, but money losing its value and a world starting to suffer a renewed bout of an old enemy of prosperity, inflation. Unfortunately, we've turned our backs to inflation during the past decade, when we're about to relearn the painful lesson about respect, warns Connell Fellenkamp, a professor at practice of economics at Duke University. The Fed and the Biden administration are dismantling the latest inflation data, claiming that the jump in prices are merely temporary. Besides, to continue, it will be good to let the economy run hot for a while. In other words, don't worry, higher inflation will not be a big deal. Let's look at that and talk about something very interesting that we've seen out there. Go on to Google, look up trading economics, type in copper price chart, and look at the 12-month chart. Copper price has gone up it's doubled in the last year. We look at lumber. Lumber is timber. Timber is what your house is made out of. Lumber prices have gone up 6 times in the last year. If we look at iron ore prices, they have doubled in the last 12 months. These are not isolated parts of the economy. These are fundamental commodity prices. So I always tell people, don't go and buy in mining towns, because people think Nathan goes to buy cheap properties, it must be in mining towns. I buy everywhere. Don't be fooled. I'm in every neighborhood in this country buying up properties for myself and for my investors. However, in these mining towns, I saw a big opportunity going back 4 years ago, when I did a YouTube series called Raw and Uncut. Some people said it sounds like a porno. I never thought about that at the time. Raw and Uncut. If you have a look on YouTube, I talked about all these things happening, and I did a mentoring program surrounding that as well. With the market at that point, I said that we would see a massive commodities boom occur, and from the commodities boom we would see lots of inflation, and that's where it's coming from. So, for example, recently someone told me that a house price to build will be rising. Builders are rising their prices on house cost, construction costs, come the 1st of July. So, ready for it? 50% price rise on the cost of construction. So if it costs you $300,000 to build a house today, it will cost you $450,000 in 2 months' time to build that same house. That is because the cost of goods have gone up, and we haven't even factored in that we're going to have wage price inflation very shortly, because getting access to good quality staffing at the moment is a big problem out there for everybody. Something, they're saying this is just transitory. There's a word called transitory. It's out there in the media when you see inflation. They're saying this inflation level is transitory, and it's just going to be around here for a short period of time. However, this is not transitory. This is here to stay. So this goes on to read, the Biden administration isn't quite dismissing inflation worries, but it is downplaying them and putting them in the context of return to normalcy after the price of many goods collapsed when demand disappearing during the pandemic. We take inflation very seriously, the White House press secretary. You have no control over that, to the White House, should I say. It is the central banks and their mismanagement and fraud that they do, which has. But there are a number of factors as the economy turns back on, including there are areas like the cost of airline tickets, where, if you look at the pre-scamdemic, they dropped by about 20%. Rising prices have not changed our view and the view of economists. I would say around the country there is more that needs to be done to put 8.5 million Americans back to work. There's a lot to this article, but I think we get the picture. Something that I'm seeing out there at the moment is massive inflation. We've talked about that for quite some while. I talked about this beforehand. Don't get scared when I say what I'm about to say, because it is a part of this cycle. Nothing is linear. So house prices don't go up in linear. Things just don't happen linear. There's waves and cycles, and they go up, down, sideways for a bit, whatever. My view, and this is exactly from the start of this, the onset, before this even occurred, I called a thing called a GFD, which is the Global Financial Depression. I said that we would see periods of massive inflation, and then would see them trying to stop it, and it would cause a recession, a big recession, and they'll have to turn it around. We saw a recession, a depression, and massive inflation, hyperinflation start in 2020. Just think about that, right? When in the history of mankind have we ever seen in 1 year a bit of inflation at the start, recession, depression, hyperinflation, right? When have we ever seen that in a year? I did say, and I'm on the record for saying it, maybe some of my team can find the video from the mentoring program where I actually talked about that we would see big spikes up, and then when they take away all the stimulus, we'd see big crashes, and then we'd see big spikes up again, and it would cause hyperinflation. I think that what we'd see is normally like a 10-year cycle of a recession, a recovery, and all that sort of stuff will happen in 1 year blocks. And it just purely comes down to the fact that the world is stuck on cheap, easy credit that they have to print via stimulus packages. And this is evident that they are forcing us, because if you go and take your cash out of the bank, there will be bank runs. If your money is trapped in the bank and you can't take it out, and it's a cashless society, that money is not yours because it's the bank's, and it's always in the bank, and you can't see a bank have a bank run because it's trapped inside of that bank. So we have seen massive period of inflation recently. I think they're trying to toy with pulling back and peeling back some of that stimulus sort of money that they've put out in the marketplace, and it will be catastrophic. I think that what they're going to need to do is print more of that money and stop it from collapsing. Time will tell. I think the next 6 months, 12 months are going to be really fun. Do I think we're going to see a crash? No, but I think that quickly we will see, like we saw in Q2 or Q3 last year, when the recession came down to the most negative GDP ever. It was like negative 10% in a quarter, and they go, well, let's print some more money. Them taking that money, printing off, will cause that to come back, and then we're going to see them print more money. It's going to be really, really amazing. So personally, I think that we could go through a part of quantitative tightening. I did have some questions here from some mates beforehand that had texted through, and they said, what is this about interest rates potentially rising? There's banks out there talking about interest rates rising. Will interest rates rise? Nathan, you said that interest rates would go negative. I still believe that we're going to go negative. And when I said that we would go negative, I never actually thought that we'd see the level of stimulus packages, support, like mortgage holidays. You don't need to pay your mortgage you don't have to have negative interest rates, so you don't have to pay your mortgage. So the amount of stimulus packages that are being injected into the system, the liquidity, has far exceeded what negative interest rates could have done. But I still believe they're on the record, and they're on the cards. Sorry. As for will interest rates go up, I do not see it possible in any way, shape or form that we could see interest rates rise. The central banks would commit financial suicide to the whole economy. It is too weak. We have not seen one interest rate rise since 2010 here in Australia from the central bank at the RBA. It's only been down or sideways actions. If we were to see them increase interest rates just to 1%, it would mean the cost of money on the bank bill swap rates would be 10 times higher. So all the debt the country took out, all the debt the government took out, is not bad when the government has $1 trillion worth of debt in 1 year. Just think about that, right? It took the era of the Keating government like 5 years to cause $98 billion worth of debt and the recession that we had to have. And it took 11 years for the Howard government to pull the country out of recession, which all they did is raped and pillaged all the assets, but that's a different topic. It took 11 years to take out that. In 1 year, we created $1 trillion worth of debt, right? That's phenomenal, right? But the cost of that debt came down so cheap, it's 0.1%, it's 10% or 1% of an interest rate. If they increase interest rate to 1%, it means it would go up tenfold, the cost of the nation would go up, and there would be massive issues. There would be massive issues, and this would go throughout every economy around the world. I think that they'll make it tighter to get money. I think that they will try and ratchet up the economy right now. Whether it's right now, whether it's in 3 months or whatever, they've done it by stopping the stimulus packages, the JobKeeper, the Job Seeker, all those sort of grants they were giving out being cut back. Let's see what happens to the market from there, because there's going to be a lot of interesting times, and I think that they're going to have to put the printers back on to keep this system alive. This is a picture of the economy in palliative care. It's hooked up to a dialysis machine. You try and take it off, it has to go back, right? It has to be wheeled back into there. The economy is in a vegetative state right now, and it needs this support. If they try and take it off, the economy will implode. So I think they're trying to attempt quantitative tightening. How far will they go? There hasn't been many new sort of stimulus packages, but there's been things exploding, which is making it very, very difficult. Such as, there's one of the articles here, is I'll get to it shortly. I'll get it out now. Here's an article here. Solar Power's decade of falling cost is thrown into reverse. Everybody wants to go to green energy, right? But let's read this story. This is from Bloomberg. It was from Yahoo Finance, followed on from Bloomberg. A key selling point that made solar energy the fastest growing power source in the world rapidly decreasing cost has hit a speed hump. Solar module prices have risen 18% since the start of the year, after falling by 90% over the previous decade. The reversal fueled by a quadrupling in the cost of the key raw material. Quadrupling. So the price of a solar panel has gone up by 20%, or 1/5 of the cost of the panel. But the cost of that panel has gone up 4 times, 400%, right? That's what quadruple, 4 times the cost it costs to build that same solar panel. And I'm happy that I got into solar and built a solar farm using repurposed solar panels way before any of this thing happened. So, looking at the opportunity, they can't make solar panels affordable because the cost of material has gone up. So if we're looking at the cost of material for a solar panel that's gone crazy, let's think about the cost of the house, right? Let's look at the cost of a new car. If a new car cost goes up way too high because of the cost of the metal, it will drag the second-hand market up. What has happened? We've seen the second-hand market of vehicles go up crazy. We've seen new prices go up crazy. We're seeing everything go up, right? Go buy assets that are below rebuild costs. That's what I've been doing. That's where I see the opportunity in this market. There's so much opportunity in this market. People that haven't had inflation hit things. Everything I buy is stuff that hasn't been inflated. Whether that be precious metals, whether that be any form of metal, to be honest. Second-hand cars like clappers. Like I've got hundreds and hundreds, thousands of acres of land throughout this country where I can dump machinery, dump any form of good that's below the value. I'm about having commodities, which is really cool. Here's an article from Zero Hedge. Just going to read through this one quickly. Inflation, the 1970s, the 1980s, and the and in today. Sorry. So that's the article. It's a bit of a lengthy one here. Goes on to read. We'll start from the top. Inflation of the 1970s and the 1980s is a big topic just by now. Big topic just now, but a deep dive into the historical CPI data, as I brought to you the other week. CPI data shows the world was very different then. The CPI peak in 1974 felt awful because the food and clothing was 33%. Interesting number, 33% of the index, and the prices were up 8 to 12%. Those items are just 14% of CPI now. In the May 1980s, 13 to 14% of CPI inflation was driven by the higher mortgage prices, no longer even used in CPI. Bottom line, look forward, not backwards, and consider energy stocks, gold, B, and even US stocks as inflation hedges. There's lots of things that you can hedge about in the market, and that is not cash, not money, not fiat illusion, Ponzi scheme currency that we have, that we are forced to use at a bank. You do not know how to think about inflation unless you've lived through the 1970s. Well, I don't think anyone really knows how to live through inflation unless they've lived through the 1940s in Hungary, or the 1920s and the 1930s in Germany, or the 2000s in Zimbabwe or Venezuela or South Africa. There's inflation and there is hyperinflation. We're going into a world where everything is rapidly going up. How can you keep the cost of a solar panel at the price if all the goods that have gone into building that solar panel have gone up 4 times? You can't just increase it by 20%. You have to increase it by 400%. That is where the hyperinflation is coming in. I did a video on this. Go check it out. It's still on YouTube. It's one of the coolest videos that everybody loved. It was about hyperinflation. It was before its time, and also talked about hyperinflation in the Raw and Uncut video series back in 2017, 2018. And check out the comments below and ask those people where they are now, if they're still in their mum's basement, if they've got a girlfriend, because those comments, people were saying, Nathan, this is never going to happen. You're going to go bankrupt. You're broke. You're a loser. Blah blah. There's so much writing on the wall. There's something really awesome, like amazingly awesome, that I want to share with everybody. After I read these news articles, I'm going to go look it up on my phone. I actually forgot to talk to you guys about it, and it is what triggered this. So everyone thinks, when I call it the scamdemic, right, I never said there wasn't an illness, right? So let's just be really clear on that. I think there's being used to mop the floor. Maybe there's people getting sick, maybe there's not. It's not my place to talk about that. However, it is a scam what they are doing with this, right? They are forcing us for a third line, forcing us into a world that we don't want to sign up to, and it's brought on by fear and by propaganda and whatnot. But in September 2019, the financial market imploded. Something called the Repo Crisis, which had occurred, and I'm going to go into what has happened to that recently, because it has reared its ugly head up, and it is really coincidental. It is amazing, and it is a beautiful thing to see, because it's going to mean where that new batch of stimulus is going to come from, and you can sort of forward plan and reverse engineer of where we're going to end up next. I've got these articles here. There's lots of articles. There's lots of questions coming in. I think I'm going to leave some of these articles for now. Here's one. This is my last one. I'll read this one. This is an article from Yahoo Finance. China targets speculators and hoarders to stop the commodity boom. That is communism, folks. That is communism. China stepped up its fight against soaring commodity prices, summoning top executives to a meeting that threatened severe punishment for violations ranging from excess speculation to spreading fake news. The government will show zero tolerance for monopoly behaviour and hoarding, the National Development and Reform Commission said after leaders of top metals producers were called to a meeting in Beijing with multiple government departments on Sunday. They pushed to rein in surging metal prices rippled across the markets, with steel dropping as much as 6% and iron ore tumbling by close to the daily limit before prices steadied. The warning from the NDRC comes as broad surge in commodity prices and fuels fears that faster inflation could dent economic growth in China and beyond. Let's just think about that. Is China set up for inflation? Is your country set up for inflation? Is Australia set up for inflation? Who is set up for inflation? Just going to have a little water. So here we are having China talking about how they're trying to curb inflation, but they can't. This is not a Chinese problem. This is not an Australian problem. It's not a US problem. It is a global depression built on a hyperinflation. The only way out of this is to inflate, and inflation we will get. This article, I think we get what it says, right? This article, we can leave this article here. Inflation is running away in China. They're trying to stop it. Will they have the ability to do that? I don't think so. So getting on to the really important thing that I forgot to even talk about today, which is the repo market. The repo market is the repurchase agreement. So back in 2018, the 10th of October 2018, the market imploded. The financial system was crippled. They printed a lot of money. They went from quantitative tightening. They were tightening the market very tight. Like they were like choking the market in 2018, 2017, 2018. Interestingly, and I know a lot of people here love crypto. Interestingly, we saw the market get squeezed in 2017, 2018, and then the prices of cryptocurrencies and everything started to fall. By October 2018, they reversed course and they stopped squeezing everything, let it go, and then they had to start, putting drip a little bit of liquidity back in the system. But the real kicker was in September 2019. I did a lot of Facebook Lives back then. You can go and check them out on here. In September 2019, there was a thing called a Repo Crisis. Basically, every day when the banks close up, the banks have money that they're owed to each other, right? If you think about the bank, it used to take 2 or 3 days for the money to transfer from your bank to the other bank. Now there's a settlement agency called OSCO, which suddenly came out. OSCO came out at the same sort of time, and things happen on a daily basis. But it would take 3 days to settle that money from one bank to another bank. What occurred in September 2019 is that the banks went bankrupt, and the New York Fed had to jump in, and they tried it for 3 weeks to help fix up, and they gave some short-term liquidity of $10 billion per day. So $10 billion for a 1-month loan or 3-week loan or whatever it was that they lent. So they lent $10 billion a day, and then it was repaid within a month. And then within a month, that had gone from $10 billion a day to about $60 billion a day. And they dragged this out for 3 months. And then after about a month, it went up to $100 billion a day and got dragged out for another quarter. And then it got dragged out further a month later. And basically by the start of 2020, the repurchase agreements were consistently at least $100 billion and some days $200 billion per day. And then someone ate a bat somewhere in the world, allegedly, right? And then the world had this big scamdemic going on. And then suddenly they had to print all this money and liquidity started flowing. No one ever talked about the repo crisis ever again, right? The market was fine. Everything was great, right? All this money being printed, no one ever questioned it. However, some of the nations started to stop and retreat from their stimulus packages and money printing, such harsh money printing, in the trillions of dollars worth of money printing. We printed more currency, fake, dodgy, bogus. They used to be bills or pieces of paper with dead criminals printed on them. Now it's trapped in the bank. You don't even get to see pieces of paper. They're just digital credits. And if you try to go to the bank, you won't be able to get your money. So if you're just signing up new here and watching this right now, at the start of the video I was telling everyone about the big scam at the banks. But now, I haven't seen the article. I need to go grab the article and pull it up for you guys. Bank, Repo Market News 300. Leave the figure out. Billion. We'll find a cool article here. Here we go. 5 days ago, Wall Street. Actually, no, let's read this one from Bankrate. The repo market explained and why the Fed keeps pumping hundreds of billions. Let's just get that right. In September 2019, there was a repo crisis, which is the repurchasing agreements where the banks were insolvent. They couldn't tell which bank was bankrupt. There's a few banks. I had my thoughts. I gave you my feedback right in the day. The banks were bankrupt. They couldn't settle their debts, basically. So the central bank came in. They printed out $10 billion a day, and it was only like a 1 week loan, 2 week loan. Then it stretched out to be 2 month loan, 3 month loan. And then it lasted, and then it increased from 10 billion a day to 100 billion a day over a period of 3 months. And then we got said illness. No one ever talked about it. And now we're seeing articles. The repo market explained and why the Fed keeps pumping hundreds of billions into it. I can't even say that word. The crisis, let's call it, has caused the Central Reserve to radically up its involvement, in what's basically one of the world's most important pawn shops. It's a pawn shop, they class it as, the repo market. I'm going to post this into Birchfeed right now. If you guys are in Birchfeed, if you're not in Birchfeed, join it. Birchfeed.com. It's free. Don't be a tight ass. I'll just post it. I'll write about it a little bit later. Short of the repurchase agreements, the repo market is a complicated yet important area of the US financial system where the firms trade trillions of dollars, right? This was a couple of billion. Then it went into lots of billion. Now we're up to trillions of dollars worth of debt for cash each day. The activities on this market keep the wheels turning on Wall Street and the broader economy. So if they weren't printing trillions of dollars per day, this is a fucking Ponzi. Where's all the shift gone to? This is a casino. This is the Ponzi scheme. Short for repurchase agreements, the repo market is complicated. Yep, we've gone through that. To further illustrate on just how important it is, the repo market has demanded Fed action for more than 7 months now. It first caught the Fed's attention last fall after a technical glitch caused short-term interest rate to surge well above the Fed's target range. Then, in response to the economic threat from the so-called virus, it led the US central bankers to drop a bazooka in March, a series of short-term loans totaling $1.5 trillion fucking dollars, right? $1.5 trillion dollars. But the Fed's involvement is complicated. Experts say it is an important part of ensuring things don't go from bad to worse, but it still managed to raise some prominent people's eyebrows, including the Sens, Elizabeth Warren and Bernie Sanders, senators. Here are the main things you need to know about the cash crunch, including what the repo market is and why part of the Fed's response is how it could impact you. What is the repo market? To understand how these operations impact you, it's first important to learn some of the basics on how it works. The repo market is essentially a two-key intersection where the cash on one side and treasury securities on the other, they're both trying to get to the other side. One firm sells securities to a second institution and agrees to purchase back those assets for a high price by a certain date, typically overnight. So it's short-term lending, they're short-term loans between the banks, and they have to step in because the banks are bankrupt. The banks do not have any money. Hence why we don't have money at the banks, because it's just none. Go on and read it. The article's there. As I said, it's called The Repo Market Explained and Why the Fed is Pumping Billions of Dollars. It's in Birchfeed. On that last little note, so the crypto market. Last week, Bitcoin, everything fell, right? A lot of people ask me, what do I think? Am I buying up? I'm not buying shit. But let's just be very clear. I love crypto. I mine it. I have solar panels everywhere working, making me crypto. Cash flow's cool. Crypto is coming through. That's great. I will not be buying Bitcoin at 50,000 because I bought Bitcoin when it was very much cheaper. The downside risk is far greater. It can go down, it can go up. Right? My position is set, so I'm not out there buying it nowadays. I bought my position a long time ago. However, what is my view and what is my take on what is happening now? I have filmed a podcast for next week. I believe it's on next week's podcast of the No BS with Birchie podcast. But just in short, I feel that the central banks have taken, let's pretend that we're making phones, for example, right? Let's pretend that we're making devices, electronic devices, and we're a big company on the stock market, and we want to get those prices cheaper. We go and set up a sweatshop in China, let's call it, right? We set up a sweatshop, and everyone looks at it and goes, "Oh, well, you've been making these iPhones very cheap." So we wouldn't want to set that sweatshop up under the company on the stock exchange because that would be bad, right? It'd be detrimental. So just like I just said, the repo market has kaboomed, and the repo market is the biggest time bomb out there. You would take that part of your business and put it on a separate balance sheet, right? So this one looks healthy, that one over there doesn't look so healthy. If you wanted to blow up a company, you wouldn't blow up the one on the stock market, you'd have an off-sheet balance sheet transfer company that you would blow up. I personally feel that with all this liquidity that's going in the system and out of the system, so quantitative easing, they put money in. Quantitative tightening, they take money out. I believe that they are using cryptocurrency as some form of derivative. I don't have the answer for it. I'm not talking negative on it. I still hold on my cryptocurrencies. I love it. Nothing will give you a great return such as like 500% or 5,000%. I've put stuff in for $500, it's gone to 50 grand, right? Straight up, bang, right? You can't get those returns, but understand that that has massive elements of risk. So if you do something great over there in the crypto market, you would want to also take it out and put into sound assets. But my belief of what's going on is that repurchasing agreement market, the dog shit wrapped in cat shit, derivatives market, I believe that they are using liquidity in and liquidity out of the market by using cryptocurrencies, and that is where we're seeing a lot of volatility out there in the market. We can sit there and put 20 people on a table and go, it's Elon Musk, it's China, it is people getting fear and all this sort of shit. We put everyone down, have our own opinions about it, but only one person may be right and everyone else is going to be wrong. My view and my take is, let's look at it from a bigger perspective and looking at the whole market as a whole. Why are we seeing liquidity getting sucked out of the market? Why are we seeing over here in another area of the financial system things blowing up because something's going over here? If we imagine if everyone had their money in crypto and we saw the crypto market crash and Bitcoin went back down to 2 grand, everyone's pulled money out of their mortgage, everyone's hocked their car, everyone's done whatever to get into the cryptocurrency market, and the crypto market blows up, all of those people would lose their liquidity, right? So therefore, we would see a recession because those people wouldn't be able to partake in the rest of the economy. These economies are all interconnected, right? And as we have a digital assets here being our cryptocurrencies, if we are seeing the crypto market expand very big, all those people with their crypto assets now have a greater net worth because their capital position has been expanded, and that would give them more capital to go and buy a car, go and buy a lounge, go and buy a property, whatever the case may be. And that is a new bubble that they are inflating and taking that air and steam out of the market. So my view is that crypto has been turned into some form of derivative, and they are not telling us about it. That is my big thing for everyone this week. On that note, I noticed that we've been here for 1 hour and 8 minutes. I want to thank everybody for tuning in, watching this. If you do like the videos, smash up the likes, share it. The more that you share it, the more that I see that you want me here, the more I'll do these videos. And make sure that you do watch out and listen to the podcast, the No BS with Birchie podcast. out every Tuesday. If you need help with anything, you can reach out to my team, 1300 367 925. Send us an email at admin@binvested.com.au. And if you do want us to have a look at your portfolio, look at your position, see how we can help you make the right moves during this market, do ask the team for a free discovery session. We'll catch up soon, and keep being awesome. It's a great time to be live. And I've never been so excited as I am in 2021 or 2020. Last year was the best year of my life. This year's even better for my life, and so many exciting things that we can see, lots of opportunities. For me personally, I'm not playing for my life today. I'm playing for my children, my grandchildren, and future generations. And that's where it's at the moment. There's so many intergenerational wealth opportunities at this time in our lives. So look forward to being able to help you guys however I can. And thanks a lot for watching as always. Bye for now.